My name is Ian Ayers, and I'm a professor at Yale Law School.
Okay, we're here to talk about predatory lending practices as it relates to the minority community. And I understand you've done a lot of research here. So why don't you tell us what you have found out?
Sure. Well, way back before Barack Obama was president, when he was actually president of the Harvard Law Review, the Law Review published an article of mine that tested for race and gender discrimination in new car sales. And what I sent out testers to hundreds of Chicagoland car dealerships, and found that in that first study that African-American testers were charged or were asked to pay substantially higher prices than Caucasian testers. And so my first foray into something close to predatory lending was testing and finding race discrimination in new car sales. And a few years later, I was able to get data on the car sales of a substantial dealership in Atlanta. And there, the data from their sales included not just the markups on the profits on the from the transaction price, but also I could see the profits on car finances, and that this also showed that African Americans were paying the dealerships substantially higher markups on the loan. And a crucial aspect about car loans that most people don't realize is that if you get a car finance, either a new car or a used car financed by a dealership, the dealership sends your credit history to a lender, and the lender sends back to the dealership a private interest rate that that the lender is willing to lend to this buyer at. So I might say, hey, dealership, I want to borrow $35,000. They send my credit history information into a lender. The lender tells the dealership, hey, for Ian Ayers, we're happy to have you to lend to him at a 5.5% interest rate. But dealership, if you can get Ian to sign a 10% APR, we, the lender, will immediately give you, the dealer, $8,000 in cash.
You know, I know that that's true because I used to be a car salesman in North Carolina, and I know it was kind of like a running joke as to who was going to walk out of the finance office with a high interest rate. And it was, and of course the finance guys, this is how they got paid. The higher they could get you to go sign on the dotted line for, you made more money. In fact, in doing some research of my own, I have found out that nearly 63% of the time, qualified minorities paid more for loans than whites who were not as qualified as for them. And it seems that this is just across the board throughout the United States. So what has, in doing your research and exposing this, has there been any change?
There has been, and I should also disclose that I was soon hired as an expert witness in a series of cases challenging this practice as being a violation of the Equal Credit Opportunity Act. And this litigation bear a substantial fruit, that there are a number of large lenders that at least for a period of time, agreed to cap the amount by which they would mark up loans, to say, look, if the lender's willing to lend to me at 5.5%, the dealership can't charge more than, let's say, 8.5% or maybe 7.5%. You cap the markup at 2% or 3. And that's particularly important because I found in a variety of data sets that African Americans not just paid on average higher markups on their APR, on the interest rate, but that it was particularly of the loan transactions where the dealerships were making more than a $2,000 profit, that those were sometimes 70–80% minority buyers, even though the buyers only make up 15 or 20% of the dealership's
customers, right?
Make up a huge proportion of the home run sales.
I found out that a company, Ally Financial, they were hit with, I think, a $60 million, or it could be $80 million, don't quote me there, but they were hit with a high penalty, and they were supposed to give back or pay back some of that money. And to date, to my knowledge, that has not been done because of legal mumbo jumbo and all the things that, stop that kind of thing. So if the laws won't back up and get rid of these predatory lenders, what else can you do? I mean, because this happened in 2015, that they were. So what is the solution?
Well, I still think there is hope for law to play a role, both judge-made law and statutory law. Part of the good news is that there have been states that have passed statutes that say dealers can't raise the interest rate more than 2% or more than 3%. And by looking at national data, I can see that the finance profits are lower in those states and the racial disparities are smaller. So those statutes are something that can happen. This litigation, I think, I'm biased because I was an expert witness in it, that can work. The Consumer Financial Protection Bureau, the CFPB, has new regulations. They have been pursuing some of these cases, so not just private litigation, but also government litigation. And finally, it's podcasts like this. I was in an extraordinary meeting in Detroit with Jesse Jackson and the financial head and the CEO of GM's finance unit. And so public policy, public publicity can be brought to bear to make progress on this issue.
Well, I was looking at some of the numbers, and GMAC really, really did a disservice to a lot of minorities all across the United States. And depending on where it was, if it was in the South, quite frankly, it was a lot more. In the northern states, it was a lot less. But I looked at those numbers and I was really astounded because according to the American Bar Association, more than, I think it's 25 billion that this is costing African Americans, 25 billion in economic value or whatever. So, I'm wondering about something. We now have online car sales where you can purchase the car online. Would that get rid of the color barrier? Because, how else would they? Well, I guess when you put in your application, that comes up that you are a minority. So
it does, and there can be entrances brought made on where you live and on first names and last names. I think the internet has not proven to be as I do think that there has been that internet sales have reduced the amount of racial disparity in the front end. But one of the biggest ways to make progress on this is to get your finance in line before you go to the dealership. There's no reason that dealerships are a better place to help get you, especially in today where every smartphone, can have a Quicken Loan or Rocket Mortgage app. There's a lot of, it's never been easier to try to find credit, and that's trying to have when trying to get some competition over your car loan rate is likely to give you be one of the more important ways. Another kind of statute that I would favor is we have already, with regard to home mortgages, if the home mortgages have a very high interest rate, by regulation, they're called a high cost mortgage. And the lender has to go through some more procedures and warnings before they can lend to you at that high rate. I think it would do well for states or the feds to pass a similar high cost car loan warning. Now, some people have really bad credit and deserve to pay a high interest rate. That's
Right.
not a dealership markup. But one of the amazing things that I found over and over is that the racial disparities actually grew when we looked at consumers that had the best credit. Among consumers that have a really bad credit score, there's not as much of a differential in markup, because usually in many states, those consumers are going to be protected by the usury cap. But if you have really good credit, that gives the dealership more room to inflate this. And I had data sets where I was able not just to see credit score, but I was able to see jobs. And there are major lenders out there that are persistently charging higher interest rates, to controlling not just for credit score, but when we just look at the people that are veterans, or just those people that are active clergy in job category after job category, people that you think have education, that there was systematic advantage taking going on, and so yes, the law can be frustrating and slow, but I think there are still some possibilities here to make progress.
Let's flip the coin here, because there are many people that will say, hey, listen, you go to buy a car, if they tell you 40,000 in the car, the car is only worth 25,000, why are you signing on the bottom line? So there has to be something that acknowledges that we need a better, more educated consumer. And so what do you say about that? Because it is true that, if you go to buy a car, if you go to buy a house, whatever you buy,
Yeah.
if you go to the grocery store and you compare prices, there's no difference when shopping for a car. So what do you say? What are your comments on that?
Well, financing is an interesting issue. Now, not all Americans, but I think a substantial majority of Americans know that when it comes to the car price, that you shouldn't pay sticker, or at least that you can negotiate over the car price. But there are a couple, I think, really important things. Many Americans don't know that you can bargain over the interest rate, that the dealership comes back and says, oh, Ian, you have to pay a 10.5% interest rate. And I come back and say, well, just like it was the car price. Well, would you take 8.5? And they just think that's, well, wait, no, that's bank stuff. I've never heard of anybody negotiating that. And secondly, people think of their finances as incredibly personal and individualized, and they don't realize that from the lender's perspective, this is a commodity. And somebody's loan to value, how much other debt they have, and their credit score, you can put them in a tier really fast. And so people are uncomfortable about talking. They're guilty about their credit. They're uncomfortable thinking about dollars and finance. And they understand how much a cup of coffee or how much is the car price, but finance over time. There are a lot of people that just say, look, the one thing I care about is I can't pay more than $300 a month.
Right, I was going to say that.
That's the finance and insurance guys say, great, I'll get you $300 a month for 12 years, and not the normal 3 or 5 year payoff thing.
Yes, we had that happen many times in when I was selling cars. People would come in, and my maximum payment is $350. That they didn't care about the interest rate or anything. They cared about the monthly payment. And still, and I'm going to say probably 60-70% of the cases, that 350 turned into 363 or 373. So not only, so they actually kind of what's the word? They kind of, you know, had put themselves in a bad situation going in, telling them what the payment would be and so forth. But truthfully, that's what most people are concerned with, the monthly payment. So what do we do now? Is this happening here in Connecticut?
Well, you know, I just haven't had access to more recent data, so I don't, it's likely happening in Connecticut, but I actually haven't, I can't speak to that. But I can tell you just, you know, a vivid example of how this can happen during when the economy is having a problem, like after 9/11. There, if you can, if people listening to this can remember back that far, to boost car sales, just about all the manufacturers had special 0 APR promotional deals.
Right.
But the important thing about that is that they were for specially qualified buyers. And so if you took 2 people that one had really good credit and one just had average credit, in normal times, that might mean the one with good credit deserves a 5.5% interest rate. The one with moderate credit deserves a 8.5 interest rate. But then what happens after 9/11, that 5.5% gets reduced to 0. And that 8.5% isn't capped. And not only is it reduced to 0, the dealers are prohibited from marking it up at all. So 5.5 goes to 0, and the 8.5 is not capped, and it goes up to 12. And so what started out as a 3% difference becomes a 12% difference. And minorities are much more likely not to qualify for those specially qualified buyer deals. Those are causing racial disparities where they could have said, you could just run a promotion. Manufacturer could say, we're going to buy down the interest rate 5% for everybody. They don't do that. They just do it for the best qualified.
For the best qualified. And I'm wondering now that we have, because due to microchips and so forth, new cars is not enough. There's demand is outpacing what's available on new car lots. A lot of people are switching to used cars. Yeah. There is a ton of money. As a former salesman, I can tell you, there's a ton of money to be made at used car sales. Is this a time when people need to be extra vigilant about purchasing a vehicle?
Yes, yeah, and again, you can be taken advantage of with regard to financing on used cars as well. And just trying to make sure while cars are scarce, cash lending is not scarce. And so there's not a natural action. Even used car, you're going to be paying higher, the dollar amount on the used car when it's in short supply will increase. That's what my economics tells me. But cash, the lending dollar is not in short supply. And so this is still a great time to go out and get competitive offers from something like Lending Tree or your local, you know, what's a really great source? Credit unions are shown not to rip people off as much. You know, they're actually owned by the people. So if I had to get yourself one quote from a local credit union, think about get something lined up on the internet first. Try to avoid getting your financing through dealers.